Have you ever wondered how a company can transform its entire business model to unlock new opportunities and create value? Welcome to the Commercial Real Estate Insights Podcast. I'm your host, Steve Hamoen. Let's get right to it. Today, we're diving into a fascinating case study of strategic transformation. Alico, Inc., traditionally known for its citrus agriculture, is boldly transitioning to land development. This shift is centered around the ambitious Corkscrew Grove Villages project in Florida, marking a new era of value creation for the company. This project spans 4,660 acres and includes plans for 9,000 homes and 560,000 square feet of commercial space. Additionally, 6,000 acres are designated for conservation, aligning with environmental, social, and governance standards. The financial implications of this pivot are significant. By mid-2025, Alico's cash reserves skyrocketed to $42.1 million, a substantial increase from $3.15 million at the end of fiscal 2024. This liquidity is crucial as the company embarks on capital-intensive projects like Corkscrew Grove Villages. Furthermore, Alico's net debt fell by 51%, reflecting a disciplined approach to debt management. The question for investors now is whether this liquidity can be translated into sustainable cash flows as the company moves away from its citrus operations. At the core of Alico's strategic shift is the Corkscrew Grove Villages project, designed to align with Florida's growth trajectory. The establishment of the Corkscrew Grove Stewardship District sets a framework for infrastructure financing and conservation management, addressing both development and environmental concerns. However, the project's success depends on securing regulatory approvals, with construction potentially starting in 2028 or 2029. Florida's real estate market is poised for growth, with a projected population increase of 1.4 million residents between 2025 and 2030. This creates demand for housing and infrastructure, though challenges like elevated interest rates and climate risks remain. Alico's focus on high-ground properties and resilient infrastructure positions it well to mitigate these risks. For investors, the key metrics to monitor are Alico's ability to secure regulatory approvals, maintain liquidity, and convert land assets into income-generating projects. The company's guidance for $20 million in adjusted earnings before interest, taxes, depreciation, and amortization for fiscal 2025 and a cash balance of $25 million by year-end suggests confidence in its model. However, long-term success will hinge on balancing development timelines with conservation commitments. In conclusion, Alico's strategic pivot represents a high-stakes bet on Florida's future. While immediate financials reflect the costs of transformation, the company's liquidity and alignment with regional growth trends position it for long-term success. If the Corkscrew Grove Villages project gains traction, Alico could set a precedent for sustainable land development, merging profitability with purpose. Property owners in Citrus Heights have raised concerns about a proposed commercial property re-occupancy ordinance draft during a recent public workshop. The workshop, held at City Hall on August 11th, was lightly attended, but featured participation from several business owners, a representative from the Sunrise Marketplace Business Improvement District, the Citrus Heights Police Department, and Citrus Heights Chamber of Commerce Executive Director Sherry Merrick. City officials emphasized that the ordinance was still in draft form and encouraged attendees to ask questions and provide feedback. The ordinance aims to offer guidelines and support to property owners with the ultimate goal of reducing blight, preventing crime, and ensuring properties are maintained to be market-ready. During the presentation by the city's Economic Development and Community Engagement and Community Development Department, it was noted that property owners would be required to register vacant buildings within 30 days and pay an annual fee of about $1,100 until the building is occupied. Additionally, property owners must provide a statement of long-term plans, maintenance and security plans, and contact information for the owner. The ordinance also mandates monitoring fees, which would cost about $1,100 annually for properties less than 1 acre and $5,600 for larger vacant properties. However, exemptions would be provided for properties that are 75% occupied, have no active code violations, or are actively under construction or pursuing construction permits. Concerns were voiced by property owners about the potential financial burden of these fees. One property owner, managing properties at a shopping center on Greenback Lane, pointed out the significant increase in insurance rates and the planned revamping of the landscape and asphalt in his parking lot as additional financial strains. Property management representative Tiffany Clement from Merlone Geyer, which manages Sunrise Village, challenged the notion that property owners are not attempting to fill vacancies quickly enough and that fees would expedite this process. Clement and Merrick expressed worries that the financial burden of these fees would ultimately be passed on to tenants, resulting in higher rental fees. Merrick also questioned the efficacy of similar programs in nearby jurisdictions and whether they have been successful. Economic Development and Community Engagement Director Megan Huber indicated that the city plans to provide property owners with a support packet upon registration. This packet would include maintenance checklists, crime prevention through environmental design guidelines, staff contact directories, and business marketing and permitting resources. The city highlighted issues with absentee property owners and provided examples of properties that have been vacant for years, leading to neglect and deterioration. Community Development Director Casey Kempenar mentioned that severely neglected properties might require demolition, as was the case with a former Marie Callender's building that is slated to be demolished and replaced with a smaller drive-through restaurant. City Manager Ash Feeney clarified that the ordinance is not intended to be punitive, but aims to address absentee property owners who neglect their properties. Feeney assured attendees that feedback from property owners would be incorporated into the draft ordinance. The city plans to revise the ordinance based on feedback received and will present it to the City Council for approval at a future date, which has yet to be determined. Innovative Industrial Properties, trading under the symbol IIPR, has generated interest among investors due to its focus on properties used for cannabis cultivation. However, there's a growing concern regarding the potential plummet in real estate value and how it might impact the company's financial health. According to the investment doctor, the preferred shares and 2026 bonds of Innovative Industrial Properties offer yields of 8 to 9%. These are considered to have lower risk compared to common shares because of their seniority in the capital stack. The company's robust real estate portfolio, valued at approximately $2.15 billion, along with a cash reserve of $100 million, provides strong coverage for both debt and preferred equity obligations. This financial structure ensures that interest and preferred dividend payments are exceptionally well covered, with low payout ratios even in weaker quarters, which is crucial for maintaining income security. Despite some tenant risks, the asset coverage remains strong, making these fixed income securities attractive for conservative, income-focused investors. The investment doctor highlights that while the common shares are popular due to the generous dividend yield, the preferred shares and bonds might be a more stable choice for those seeking lower-risk investments. In the context of the local market in Kitchener-Waterloo, London, and Cambridge, Ontario, real estate investors are also keeping a close eye on how fluctuations in property values might affect their portfolios. The region has seen a steady demand for multifamily and industrial properties, which tend to offer more stability compared to other commercial real estate segments. Meanwhile, in the United States, the cannabis industry continues to be a significant driver for industrial real estate, especially in states where legalization has opened new opportunities for cultivation and distribution. This cross-border relevance highlights the potential impact of market trends on real estate investments both in Canada and the United States. Matt Faupel is emerging as a significant voice in the commercial real estate sector, particularly with his innovative approach to integrating artificial intelligence into property management. As the founder of FaupelX, Matt has launched the CRE Pro tool and the Unlock Your Potential newsletter to provide AI-powered solutions and leadership insights to industry professionals. This initiative aims to modernize commercial real estate by offering an accessible AI resource that acts like a 24/7 executive consultant. Matt's journey into AI began with his firsthand experiences in property management, where he identified the industry's reliance on manual processes and fragmented systems. His solution, CRE Pro, is built on the familiar ChatGPT platform, making it easily accessible to professionals in the field. CRE Pro serves a variety of functions, from assisting property managers with daily operations to helping engineers troubleshoot maintenance issues and guiding executives on strategy and trends. Beyond technology, Matt emphasizes the importance of leadership and education in driving industry change. His Unlock Your Potential newsletter has quickly become a valuable resource for property managers, executives, and vendors, addressing challenges like budgeting, capital planning, and smart building technology. The newsletter not only provides AI-driven solutions, but also fosters a community of professionals eager to lead with confidence in a rapidly evolving environment. Matt's influence is growing, with industry organizations and media outlets recognizing his contributions. He was recently featured on the Buildings podcast, discussing topics like emergency preparedness and business continuity planning. Looking ahead, Matt is working on a book that will combine leadership lessons, CRE history, and AI strategy, and he plans to launch a podcast to further engage with the community. Faupel is not just about AI. It is about empowering people and building the next generation of leaders in commercial real estate. Matt is developing additional tools like Vendor Pro and Accounting Pro to streamline property operations further. His vision is to create a platform that equips professionals with the tools and knowledge they need to thrive in a fast-changing industry. Matt Faupel is setting a new standard in commercial real estate, demonstrating that AI can be a practical and empowering tool. By focusing on clarity, speed, and leadership, he is helping the industry embrace technology while maintaining the relationships that define it. Through Faupel and his educational initiatives, Matt is unlocking the potential of professionals and setting the stage for the future of commercial real estate. Every August, Des Moines, Iowa, becomes a bustling hub as more than 1 million people gather for the iconic Iowa State Fair. Known for its celebration of agriculture and Americana, the fair attracts everyone from local farmers to presidential candidates. While it may seem unrelated to commercial real estate at first glance, there are valuable lessons to be learned from this grand event. In commercial real estate, visibility is a powerful tool, much like it is at the fair. To succeed, one must be present and engaged, whether it's through networking, attending industry events, or simply walking through the industrial park. The Iowa State Fair teaches us that being visible and standing out is crucial, just as it is in our industry. Specialization is another key lesson from the fair. Just as there are champions for each category at the fair, commercial real estate professionals benefit from focusing on specific niches. Whether it is multifamily properties, industrial buildings, or tenant leasing, being a specialist in a particular area can set you apart from the competition. The fair also emphasizes the importance of knowing and entertaining your audience. In commercial real estate, connecting with clients and prospects through engaging presentations and proposals can make all the difference. It's about being more than just an expert. It's about being an entertainer and educator, much like the exhibitors at the fair. Process and preparation are critical to success, as evidenced by the smooth operations of the Iowa State Fair. In commercial real estate, structured follow-up, solid documentation, and strategic planning are essential for successful transactions. While charisma may draw attention, it's the process that delivers results. Finally, the fair reminds us that success is grown over time, not achieved overnight. In commercial real estate, building strong relationships and nurturing them over the years leads to long-term success. Just as blue ribbon hogs take time to raise, so do successful deals and partnerships in our industry. As we reflect on the insights from the Iowa State Fair, it's clear that these lessons are applicable to commercial real estate professionals across the board. Whether you're in Kitchener-Waterloo, London, Cambridge, Ontario, or anywhere else, these principles hold true. Embracing visibility, specialization, audience engagement, process, and patience can lead to great achievements. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.